Good morning, everybody. It's Chris from Serene Education with my analysis this morning for Thursday, the 6th of September, 2018. Morning, everybody. In front of me is the matrix, and as per usual, just pause it here and have a look to see if there's anything on the chart that stands out. Clearly, there are a number of them, and once you be looking at the commodity crosses in particular, there seems to be some good movement. But then again, on the Swiss franc crosses and the yen, there seems to be a lot of movement. You'll notice that there are just a number of time frames where the MACD is not in alignment, but there again, all you need to do is obviously apply a horizontal line or a trend line, support or resistance level for a breakout for a continuation of that sentiment. So lots to look at this morning, guys. So I don't want to hear any stories where you don't have anything to trade. There's clearly some momentum across multiple time frames. And yeah, we're into Thursday, which is the day before non-farm payroll. It's the first Friday of a new month tomorrow morning. Therefore, we have non-farm payroll for the US market. In fact, there's a lot of data for the US market tomorrow. Today, this afternoon, there's a lot of US data as well. We have things such as the non-farm or ADP non-farm payroll figures. We have non-manufacturing services. We also have factory orders, durable good orders, and a number of key speakers having their say. Crude oil inventories as well, apologies. And this morning, what we had Swiss franc domestic product, GDP quarter-on-quarter and year-on-year, second quarter figures, both of which came out positive, higher than the previous figure, which is a good sign. And just out as well, we just had the German factory orders, month-on-month for July and year-on-year for July, and both of them have contracted. So not a good sign for the German market. So there again, they were expecting expansion, and they've come out well short of expectations. So we could see a knee-jerk reaction this morning on the euro crosses, especially against euro pound particularly. So have a look at those just straight off the bat. Other than that, I'm going to spend more time looking at the four majors, which are these four over here that I've already been through. Unfortunately, I closed the US dollar Swiss franc prematurely, so I have to redo that one. But let's start with the euro against US dollar on the weekly time frame. There you go. So a box over there just to highlight an area of consolidation, and price has been or was clearly in consolidation for a long period of time before we saw a breakout just recently here, and the breakout heading into the 200 period moving average. One thing to just point out straight away, this is the high that we saw at the start of the year, and price went into a messy consolidation. Liquidity got worse and worse and worse, or smaller and smaller, as we saw more and more wick, and eventually we had an outcome. No more highs, so no more buyers in the market, and ultimately what happened was a lot of contracts were closed, which saw selling sentiment coming into the market, which drove price to the downside. First to the 50 period moving average, then ultimately once price had closed below the 50, we had a continuation of selling. So therefore, we should have been looking down towards the 200, and rightly so. That's where price is headed to, and ultimately, since we've got to the 200, now we've seen price consolidating or bouncing erratically. We've seen this happen before over the last quarter of 2017, and effectively, if we are not to see any further any bullish bias, then ultimately we want to see a continuation of the selling. We need to see price closing below this as soon as possible. Now, as I mentioned to you, in a nice, decent, strong trend, you want to see both moving averages below price supporting her in this case, or ultimately in a negative trend, you want to see price being resisted, in this case, the downside. Here you can see both moving averages are on either side of price action, which is not a good sign. So therefore, it indicates a consolidation, and rightly so, we are in a messy consolidation. So there again, there's a pause for concern for this particular pair. There's a lot of apprehension for the euro against US dollar. We might have the signs of a head and shoulders, but could be premature there. And I'm just putting this up, just speculative, because we have a noticeable area of consolidation followed by a breakout, and then followed by a retracement, and then an area of consolidation yet again. And you can see the 200 period moving average would be our neckline. If this is true to be a head and shoulders, then we need to see a breakout over here to then re-emphasize that this is generally a very strong reversal, and we can look towards the downside as to particular points as viable target levels. Having said that, yeah, we are still looking for that continuation to the downside. As I mentioned, there's a lot of US dollar data out this week, so that could play a significant role in what price does looking ahead. Notice that you can see that this week, or last week in fact, is very indecisive. I'm just going to refresh it to see if there's any data. So we need to be aware that we are clearly in an area where we're seeing consolidational factors taking place. The MACD, we saw fast line below the slow line for a prolonged period of time, and that has slowed down as well, as the fast line now is encroaching on the slow line. Remember, there's still effectively 2 days for this week to close. That includes today and tomorrow. You can see the histograms as well as have pulled back significantly. So even though we have seen initial selling and the MACD is telling us we've seen a lot of selling momentum wise, we are now seeing a contraction where the selling sentiment is all but dwindled. So these are clear signs we could actually see a crossover, and if we do see a crossover, we could see a greater retracement. That would then bring in to factor the 50-period moving average as an ultimate first target, and ultimately back up towards the January high point as our second target if we start to see more dollar weakness and euro strength. The RSI is still below the midline. Okay, still below the midline, so it's a negative sign. However, you can see it's corrected off the bottom here and it's moving up towards the 50% level. Anything above 50 is positive. So there again, there are signs that we're seeing a prolonged correction against the overall downtrend that we've seen just recently for 2018. Okay, so here again, signs that we are seeing hesitation in the market for this particular pair. To the daily chart, and yeah, very messy. There's that box I mentioned to you. You could see that ultimately we are looking for continued selling because we've come from the highs throughout January, February, March, and April through this period over here. Very messy. We've had a breakout. It's moved down towards, and then you can see prices just kind of just going absolutely nowhere. We had a fake out not too long ago, and now she's back within this range. So yeah, the highs, particularly through this period over here, you can see there's a box, and yeah, trading this particular pair, especially with non-farm payroll around the corner, would be far too risky in my eyes. I'd rather wait to see how this week unfolds. There's only 2 more days. Remember, the euro against US dollar is the most liquid cross in the world. So therefore, again, if there's a non-farm payroll figures comes out in any data, especially this afternoon for the US as well as tomorrow, if all that comes out and we have certainty of direction, we could see something that's going to help us plan our month for September. So there again, just be vigilant, be patient, and look for a defining continuation either of selling sentiment or a correctional sentiment candle.